All right, let's get right into it. Today, we're doing a brutally honest, no hype breakdown of the Amagi Media Labs IPO. We're going to slice through the marketing talk and look at this purely from one perspective, yours, the investor who's putting real money on the line. You know, the entire story of this IPO really boils down to this one simple question. On one hand, you've got this amazing tech story from Amagi, a real promise to shake up media broadcasting. But when you dig into how this deal is actually structured, you got to ask, who is this IPO really for? Is it to build the company's future, or is it just a massive payday for the venture capitalist who got in early? Let's find out. So before we get into the numbers, or as you'll see, the lack of numbers, we have to understand what Amagi actually does. We need to get a feel for the industry shift they're betting the farm on. And I gotta admit, the story they're telling, it's a good one. It's really compelling. So what is Amagi? Let's put it simply. They're basically the tech engine for the modern media world. Think about it. It used to take huge, expensive, physical hardware to create and broadcast a TV channel. Amagi's genius was to move all of that into the cloud. They've built a software platform that lets anyone, from a huge TV network down to a small niche content creator, manage their entire channel, from creating it to getting it on your screen, and, of course, making money from it. And this slide right here, this perfectly illustrates their main pitch. They call themselves a glass-to-glass provider. What on earth does that mean? Well, it means they handle the entire journey of a piece of content, from the glass of the camera lens where it's filmed, through all the steps like preparation and distribution, all the way to the glass of your TV screen. It's the whole shebang, an all-in-one solution. Now here's where it gets really interesting for an investor. Look at the size of the opportunity here. Amagi is going after a market, what we call a serviceable addressable market, or SAM, of over $5.1 billion. Let's be clear about what that is. That's the slice of the giant global media pie that they can realistically grab with what they're selling right now. And it's huge. This massive potential is the rocket fuel for their growth story, and frankly, it's why investors are so excited. Okay, so we get the business. Powerful story, huge market. Sounds great, right? But now we got to put on our analyst hats and really start digging into the IPO itself. Why go public right now? Is this really about fueling growth, or is something else going on behind the scenes? You know, every IPO really has two parts, and you have to understand the difference. First, there's the fresh issue. That's when the company creates new shares, and the money from selling them goes right into the company's bank account to fund its growth. Then there's the offer for sale, or OFS. That's where existing shareholders, the early birds, sell their shares to the public. That money doesn't go to the company. It goes straight into their pockets. And in Amagi's case, the balance between these two is, well, it's very revealing. And this chart just lays it all out plain as day. A very big chunk of this IPO isn't about funding Amagi's future at all. It's an exit ramp. It's a chance for the people who got in on the ground floor to cash out big time. So, let's be clear. While the company is getting some cash to grow, a huge amount of the money you, the public, put in is going to go straight to these early investors. So who are these selling shareholders? We're talking major venture capital funds. Now just look at their purchase prices on this slide. It's staggering. PI Opportunities Fund got in for as low as 21 and 26 rupees per share. Now let's say the IPO price ends up being around 500 rupees. That's a 20 to 25 times return on their investment. That's not just a nice profit, folks. That is a massive windfall. And it's being paid for by the new investors coming in through the IPO. Okay. So it's a huge exit for the VCs. But look, that doesn't automatically make it a bad investment for you, as long as the company has a real, sustainable competitive advantage, what we investors like to call a moat. So the big question is, does Amagi actually have one? This slide, which comes right from their own pitch, is their answer. Amagi's whole argument is that the media tech world is super fragmented. You've got companies that only do production, others that only handle distribution, and a bunch more that just do the ads. Amagi's big claim is that they are the only one that does it all. That full glass-to-glass service, all in one single, neat, cloud-based package. That, they say, is their moat. And hey, it's not just them tooting their own horn. The IPO document actually includes a report from a third party, One Lattice, that says, and I'm quoting here, Amagi is the only one offering a true end-to-end solution. Having someone else validate your big claim like that, that's a powerful piece of the puzzle for their story. And you can really see this fragmentation when you look at who they're up against. In each little part of their business, they face totally different rivals. You've got the old school giants in broadcasting, you've got nimble little startups in streaming, and specialized ad tech firms for monetization. Amagi's betting that customers are going to get sick of juggling all those different vendors and just want one platform that does it all. So far, we've got a great tech story, a strong competitive claim. It's looking pretty good, right? Well, hold on, because now we get to the most critical and honestly, the most troubling part of this entire analysis, the financials. Or I should say, the shocking lack of financials. Let me be absolutely 100% clear on this. The main document filed for this IPO, it doesn't have the consolidated financial statements you need to do any kind of serious analysis. This is not normal. And from where I'm sitting, as an analyst, it is a massive, flashing red flag. So, why are the numbers missing? Well, the document itself kind of gives us a clue. It points to a very specific regulation. Now, to translate the legal jargon, Regulation 6.1 is for companies that have a solid track record, usually of making profits. The fact that Amagi is using Regulation 6.2 is a very strong hint that they don't meet those standard financial benchmarks. So, what exactly are we flying blind on? Pretty much everything that matters. We can't see their revenue trend. We have no idea if they're profitable. Not net profit, not EBITDA, nothing. We can't tell if the business is actually generating cash or just burning through it. We don't know how much debt they have. Basically, every single fundamental metric you would use to value a company is just gone. Okay, so given this giant black hole where the financials should be, we have to be extra careful about the risks. So let's do a reality check on what we know and what we really don't. Let's look at where the money they are raising for the company is actually supposed to go. A big slice is for cloud infrastructure, fine, but then a huge chunk is for, and I'm quoting, unidentified acquisitions, and the rest is for general corporate purposes. You know what that is in investor language? It's a blank check. It's them saying, just give us the money and trust us. We'll do something smart with it. So what's the worst that could happen? Well, there's always business risk from competitors. There's execution risk, right? That they mess up these mystery acquisitions they want to make, and the whole industry changes at lightning speed. But honestly, the biggest, most glaring risk of all is the financial one. It's not just that the numbers might be bad, it's that you can't even see them. You are being asked to invest completely and totally blind. So, we've seen the great story, the big VC exit, the bold competitive claim, and that massive, gaping financial black box. How in the world do you put this all together and make a decision? Let's bring it all home and figure that out. This really is the million-dollar question every single person watching has to ask themselves. After everything we've just gone over, is this the right investment for you? And the answer to that has everything to do with what kind of investor you are. Let's just break it down nice and simple. If you are a high-risk, aggressive investor, someone who basically invests like a venture capitalist, then yeah, Amagi might be interesting. You're betting on the story, you're betting on the tech, and you're totally comfortable with not having any financial data to look at. But if you are a conservative or even a moderate investor, someone who relies on fundamentals like revenue, profit, and cash flow, then you need to be extremely cautious. For you, the basic information you need to make an informed decision just isn't there. So here it is, our final verdict in one sentence. Neutral, and this is only for high-risk takers. Look, Amagi's story and their position in the market are undeniably compelling. They really are. But the complete absence of financial data changes everything. It turns this from a fundamental investment into a business into a purely speculative bet on a story. You aren't investing in a company whose health you can measure. You're just gambling that the story is so darn good, the numbers won't even matter. And that's a bet you have to decide if you're willing to take.